on this so that we okay, so what this classroom is about is VPIN plus value. VPIN plus value. We've already talked about gold's relationship with volume, because volume always creates a box on gold, nearly always creates a box on gold, and therefore reading that box becomes incredibly valuable to the underlying storyline. If we look at this underlying storyline from a VPIN point of view, let's take a look at some of these VPIN areas. And you'll be startled at how good some of these VPIN areas can provide us with box pieces of information. You see that we have a red VPIN here, creating a box environment that we can make a decision in. You can see that we have an orange VPIN here, creating a box environment that we can make a decision in. You can see we get a red VPIN here, creating a box environment that we can make a decision in. You can see we get a VPIN here, creating a box environment we can make a decision in. You getting bored? You can see a VPIN here, creating a box environment that we can make a decision in. Now, when you look at just even those decisions, and I know the market is rotational during that period, of course, and it's very easy. But let's just stop a second and think about that rotational market from 9 o'clock to 12 o'clock this morning. Those swings were worth over $1,000 each. The sell swing was 1,000. The buy swing went 81 to a ultimately high price of 91. That was 1,000. And then the sell went from a high price of 91s to a low price of 75 for 1,500. Well, that's about $3,500 profit per contract just trading the VPINs on their own. And as we get into the next phase, what about this VPIN? Sell side trade. What a trade. What a winner, guys. Sell side only VPIN. 3786s. VPIN 3765s. $2,100 per contract on the drop. Well, by my reckoning, that means that you're probably sitting on $4,000 or $5,000 per contract maximum swings, just using VPIN on its own without any information from anything else. Well, that's pretty good. As we get into today's markets, you can see that we get a VPIN here, which seems to continue through, but obviously, again, it's a decision that we're trying to make here. We'll be touching on this in a second. You can see there's still a VPIN here, and there's still VPINs here, suggesting that this is turning into one massive volume area box here, suggesting there's still a lot of supply on gold at the low edge prices. We get another VPIN here, which is a pullback trade into the perfect zone. And you can have a look at that and say, well, I love the sell. Well, that paid a lot of money, didn't it? 66s to a low price of a VPIN trade here. 66s to 54s, that's another $1,200. And then we got a VPIN at the bottom edge here that went 55s to 65s for about $1,000, plus a bit of change. And we haven't had any VPIN since then. But just look at these VPIN areas. Look at these VPINs and you say to yourself, wait a second, just the VPINs made over $10,000 a contract. Just the VPIN. Working the orders. Just the VPIN. Working into some of these incredible orders. And obviously it's a starting point, it's not a finishing point. And like everything else, if you see VPIN, I don't automatically jump in and start buying it just because there's a VPIN. If I did, I would have lost a lot of money during that phase there. VPIN is the beginning of a box idea. VPIN is like any type of arrival of volume. It is a VPIN as in a high probability reversal trade opportunity. It's a high probability of informed trading. But that high probability of informed trading could be selling on a down move, couldn't it? It could be selling on a down move, like this example here. That could be selling on a down move. That's supply coming in at the bottom edge for what turns out to be a very obvious measured move, doesn't it? So you can see if we go from the bracket low to the bracket high, you'll see where the measured move stops. So when you see that type of VPIN here and it was a straight sell, you already know where the price is going to, and stopping is right there. Which is kind of crazy because that's exactly where it did stop. So when you see these, it's not just about getting it right. It's about then seeing what then is expected to happen from the VPIN. So when you saw a VPIN here and it carried on, you'd be doing exactly the same. You'd say, well, if this was a buyer and this VPIN carried on, I would be expecting this price to terminate probably somewhere about this point here, wouldn't it? It would simply be a measured move, and we start looking at that as a sell order area. VPIN is the shakeout, Jimmy, yep. So this is just the max shakeout to highlight these VPIN areas. This is set as a 2 so that we get a lot of feedback on these trades, right? But if you can make nearly $10,000 a contract on a one lot, maximum swings, not in actual terms, maximum swings, $10,000 per contract, it's got to be something that you've got to start considering, hasn't it? It's got to be something that you've got to start considering. Because these are very, very, very important decisions that are being made at these points. You don't get that volume from a retail trader unless his name's Reeve. So if you don't get that volume from a retail trader, well, what is the volume then? What do you think the volume is? It's a big institutional trade, or it is a market maker taking a play, a market maker taking a shot at something, a market maker closing, or a commercial operator coming into the marketplace, or a big HFT coming into the market for a sell order or whatever. They're very, very important trades. But we can obviously enhance our ability to recognize VPIN and what it's likely to be by looking at other things. We can look at, for example, the max VAR. If you look at the max VAR, this is this. I'll get rid of the comma squared here for a second, and we look at the max VAR. You'll already be able to recognize that this is going to be something that, if the max VAR is topping out, life is very good. But if the max VAR is ripping, it's probably going to be dangerous to try and buy into this storyline, isn't it? It's going to be dangerous to be a buyer here because max VAR is going up and it's quite heavy already. It's already quite high. Well, when this was dropping, it was quite slow candles, but max VAR was still rising at that point. The lower max VAR, look at the difference here. Look, see what max VAR is doing? It's dropping. So if max VAR is dropping and you get a VPIN, there's going to be far more chance that a dropping VPIN is going to give us, a dropping max VAR is going to give us a VPIN read that's more likely to stick, isn't it? It's more likely to stick, and therefore it's more likely to be a probability sell in that area there. You can see here that the volatility, the VAR was upticking, but it was really quite low in the water at that stage. Probably a buy opportunity. Maybe not on the downtick, wait until it turns and then take the shot. Here you can see that we're getting a very strong rip, so you want to wait for that, and then it starts pausing. You get some A10s. We don't get any VAR trades, but we get some A10s, and a high probability this market's going to start selling back off again. So when we see these areas, you say, well, that's pretty impressive stuff. We see the opportunities. We see when not to step in. We can see that in this area here with the VAR rising, it's dangerous to be a fader. It's dangerous during this period to be a fader. Just be mindful of these fast money moves. Here's another example of dangerous to be a fader. Look at the speed of the VAR rip here. Do you see it? Look at the speed of VAR ripping here. Well, if I'm going to try and fade that, it's going to be probably a disaster waiting to happen. And bearing in mind that it came from a very, look at the difference. See the VAR here? Look how low the VAR is. You see it? Very low. And then we get a max VPIN. This is almost 100% definite that this is going to be an easy money sell, isn't it? Almost 100% definite easy money short sell here. And from that short sell, you went in at 37.90s, and by the time you closed it out, it was trading at 37.70s. It was a $2,000 sell. VPIN. And then this one, well, this one isn't a buy trade because the max VAR is ripping. It's going to be a possible aggregation for a profit take, but it's not going to be a buy trade. You're going to have to wait for that to turn around a little bit. And by waiting for it to turn around, you gave yourself the space and the time to see the turnaround and then take your shot. Now, obviously, if we added in a value narrative, you'll notice that I've added in the max COMR squareds. And the max COMR squareds is just looking at the gold versus the gold-silver spread. It's nothing more. So it's gold against the gold-silver spread. In other words, this is a negative correlation to gold prices, or it should be. So this gives us something else we can look at when it comes into those areas. So you'll see here, when we come into this area here, we're already looking for a sell on the spread. So we're going to be looking for a buy on gold into this area here. Here's a great example on this trade here. You see how we got an actual buy trigger on the spread? Well, with a buy trigger on the spread here, that's going to be a sell on gold, isn't it? So we're going to be looking for that short sell on gold at that stage. Now, the only thing that was missing was a max VAR signal, a big surge in the max VAR signal, but we did get level 2 liquidity, and we did get the mid trade, and we got a really strong mid trade area, didn't we? There's the mid trade right there. So we got a very strong mid trade sell at 76s, and that 76 was not a chump change trade, guys. That 76 trade there went for $2,400 per contract. Into the bottom edge, whilst VAR's ripping, you can see that we get a very strong series of spread selling, and a very strong series of spread selling followed by a drop, suggesting gold is likely to rally off of that bottom edge now. And it did rally off the bottom edge to the tune of $1,200 profit per contract. Systematic, automatic, hydromatic. It's absolutely brilliant, isn't it? It's squeeze lightning. It is absolutely squeeze lightning, because you're seeing these signals coming in and you're saying, right, get me ready. You're seeing this signal coming in here and you say, right, get me ready. You're seeing this signal coming in here, get me ready. And you're going to start moving the needle across these stories. It's not just one piece of information. It's several pieces. It's several pieces of information running simultaneously, allowing us to start recognizing almost perfect systematic trade entries. Almost perfect. I mean, look at just the last four signals in that chart. Could you pay $10,000 and get a better indicator than that signal? So when you saw a green signal here, which is in real time, as you know, so when you saw a green signal here, you automatically sold gold. Well, we're not saying you do, by the way, just for completeness. We're not saying you do, but let's assume it was a purely automatic response. When you saw the red signal, you started to look at the bottom edge and buy some gold. And then you looked at the bottom edge and bought some gold. And when you saw red, you looked to the bottom, well, it was already a bottom edge, and you buy some gold. Those trades were worth thousands of dollars. The sell was worth $2,000. The second sell was worth $1,000. Sorry, the second buy trade was worth $1,500. The first buy trade was worth $1,000. $4,500. $4,500 profit simply from the COMR squared itself. Well, that's pretty good. That's pretty good. Now you might say, yeah, but you're cherry picking. Well, it's today's cherry picking. Okay, so we're not going back to 1946 to find the perfect cherry pick trades. And we can scroll backwards to see when we got the last sell trade prior to that. If you're interested, there it is there. So there's a sell trade there on the green. Remember, green is a sell because it's a buy on the spreads. How did that trade work systematically? That was pretty good. That kind of made some money. If I take you back to the last buy trade, Prior to that, how did this buy trade work? Systematically, how did the buy trade work? That was pretty good as well. If I take you back systematically to the sell before it, how did the sell work? Well, it was small. It was a scratch, perhaps, but it was certainly not a losing trade area. It went from 85s to a low price of 80s for 500, so it's not brilliant. I'm not claiming it is. And we scroll backwards and we find the last buy trade. How did that work? The last buy trade here worked a treat. You might say, why are you not going back to previous to that? Because previous to that, the London session hasn't started yet. The metals market isn't open yet. So nobody's trading silver. Nobody's trading silver until the metals market kicks in. And I know silver's not the market, but it's still metals generally as a rule get started to trade around about 7:30 into the London Open. So we start seeing that activity in the London metals markets across all metals. As I said, it's not specifically a gold silver market, but it's metals generally as a rule. And we do, of course, have the actual physical gold auctions, obviously at 10:30 in the morning as well. In the London session, we get the physical gold auction kicking off as well. So there's a lot of symmetry to this. Now, what I'm saying is that these aren't buy and sell signals. I hope I'm not trying to misrepresent what they are. What I'm saying is these are beginning points for a discussion. These are beginning points for you to then say, that's the value. Not every VPIN is a sell trade or a buy trade reversal. It can be a continuation play. Not every spread is a winning spread, but at least it's a nice piece of information to fit in with a VPIN. So when you look, for example, at this here, look at this here. You see how the green appears at exactly this, well, not exactly the same time, it's a candle after. We get this VPIN alert here. So not only are we getting a massive arrival of volumes, we're also getting a spreader wanting to sell that. So you must say to yourself, who sold that? A spreader did. It was quite obvious that there was a spreader coming into the markets and taking their shot, hence the reason why there was a very large surge of volumes. Our ability to establish who is there doing what becomes an incredible value for us as traders. We're seeing in real time behind the curtain. If we have confidence in what we're seeing behind the curtain, we can start joining the story. We can start dealing in the same way as the traders are that are actually doing those outcomes. If we get that confidence. So just trading the COMR squareds seems to have resulted in a massive day profit. Just trading the VPINs seems to have resulted in a massive day profit. But that's not the case, because there's going to be areas where you can see, for example, the VPINs here are continuing to drive higher. The VPIN here continues to drive higher. There's always other things to these stories you've got to make sure you recognize. We also have the ability to look at a bigger global macro value narrative behind this. For example, the dollar. And we can look at the dollar and we can say, is it positively correlated or negatively correlated to any of these signals? So going back to the earliest signal that we took, you can see the dollar is weakening here, so I'm a buyer. You can see when this sell comes in, the dollar was strengthening, so we're a seller. You can see when this sell comes in, the dollar's strengthening, I'm a seller. This one, maybe a wee bit more questionable. But certainly when we see this retest, I know there's a short-term push, but you can see that macro is very bullish for this as a long position. The macro retest here looks good for a sell. And so on. So this sell was okay because the dollar started to strengthen. This buy is a bit questionable because the dollar's obviously getting very strong at this stage. And when we push past this, you'll see that the big trade, look at the dollar. Look at the dollar. Look at the dollar here. Look at that sell. Massive sell. And that was the biggest one. And what time of the day? Well, it was also a massive VPIN right there, wasn't it? 1:20. We're coming into the bond market open, where the bonds are going to kick off, where all the markets are starting to sing our song. It's also the big mid level from the background. Look at all these mid levels. See them? and it's right into that mid-level price for what turned out to be a monstrous $2,500 per contract sell-off in just, well, you see it. It's 20 past 1. The bottom edge gets put in at 10 to 2. 30 minutes, $2,500 profit in 20 minutes. And obviously, the buy trade here I don't like. The sell trade here I absolutely adore. Looks really good for a sell trade, doesn't it? The buy trade at the bottom here I don't like. The sell trade here I adore. Je adore. And obviously, running into these sell levels, very, very strong at the moment as sell side business, not buy side business, sell side business, based on that dollar strength dominating the markets. And that dollar strength isn't a surprise, is it? Why is the dollar strength not a surprise? See the link into the first classroom? See the link into the first classroom? Why is the dollar strength not a surprise? Because we were getting a bear flattener. We were getting that bear flattener storyline suggesting that we were getting a market opinion that we're starting to see an unwind of that easy money facility by the Fed. We're seeing an unwind of market expectations for multiple rate cuts. That's going to be bullish dollars. And we knew this this morning before the US market opened. Gold is always going to be a sell in that environment, isn't it? The tie-in to the entire background is incredibly valuable. Let's take another break, guys, because we're going to have to push on. We've got one last structural classroom, which I promised we'd do. Probably the classroom we'd actually planned, but let's get that done. 60 seconds, guys.